Well, Andrew, thanks for coming on the show. You launched Petal to serve people with limited credit histories. What was the moment that made you believe this was solvable?
Yeah, so it kind of starting a company is a continuum, I think, as far as kind of how things come together. Kind of looking back into my history, I've always been pretty fascinated with finance, as not so much the finance, which I have that in my background as well, but kind of the Main Street type stuff of helping normal people solve financial problems. We started Petal in the mid 20 teens, 2015, 2016 when we started the company. Around the time that we were starting it, myself and the folks I began the company with, we actually had a lot of friends and ran into a lot of people who'd had unique financial issues, in trying to just basically live their lives. I was relatively young. I was in my 20s. I was going through school, and that really is kind of one of the peak times where you run into people who have a lot of potential, who are smart, who are going to have good jobs and be employed, and probably are going to be good customers to financial institutions. But those financial institutions oftentimes don't really understand who they are. They don't understand the risk, and they can't distinguish between a good person to work with and a bad person to have as a customer. And so, it really was cumulative. I think I'd spent a number of years working in the consumer finance world as an investment banker, meeting a lot of companies that lent money, and then over the time leading up to starting the business, just saw more and more people, who were responsible and had a lot of potential as individuals, as kind of economic, kind of units, yet were being very poorly served by the financial institutions in the United States. And took that as the initial inspiration, and just started working on it, and it became more and more apparent that there's a lot of people who have limited credit histories, yet are extremely responsible and suffer significantly because they can't get access to credit. And even more broadly, they don't have a good FICO score, and so they may have other issues, like they can't rent an apartment. They get bad quotes for apartment insurance.
Hmm.
Your credit history has profound impacts, kind of throughout your financial and economic life. And use that kind of insight to eventually build a business that offered them credit, and also gave them access to credit itself through the credit card that we launched. So that's how it came together, and I wouldn't say that there was one kind of magical moment
Hmm.
where it was something we were going to do, but it was a mosaic of a lot of little things that were important observations.
When you shared that answer, it made me realize that to a bank or a financial institution, it's serving people based on credit is almost like investing in startups. You're kind of looking for the potential and like probable outcome of that relationship. I had a question for you based on pronunciation. I noticed some people say finance and some people say finance, and most of the people that say finance have a lot of money. Is there a difference there? Is that a signal?
It's interesting. I have noticed there'll be times where I say finance and times I say finance. I think it depends kind of on the context. Yeah, maybe, I don't know. It's possible.
Good to
Finance
know.
sounds a little fancier, so maybe
You see that
that's
Seinfeld episode where George Costanza just does the opposite of everything he would normally do, and his life turns out great?
yeah, opposite world or something.
Yeah, 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 yeah.
Gonzo
So
George.
maybe
Yeah,
we should just try saying finance and see what
yeah,
happens.
yeah.
Well,
You become wealthy. Yeah.
speaking on behalf of my entire nation, I don't think I've ever heard a British person say finance. I think we always say finance. So I'm going to stick with that one.
I actually would have
Okay.
thought that it was a British thing. So
Yeah.
I guess I'm
I'm probably
completely
going to
wrong.
be proved wrong now, but I don't think I've ever heard it in this accent.
Yeah,
I'll report.
very funny.
So I wondered, Andrew, because that idea of let's give finance options to people, or credit options to people that don't traditionally have it, sounds like there's an element of risk there that wouldn't be under the traditional system, whilst at the same time you've been able to generate 700 million in investors, or I think some of it was debt and equity.
Yep.
So it
Yep.
sounds like you've got a lot of risk, but also people that are willing to back you in taking that risk. So could you talk us through maybe the investor conversations, how you manage that risk, how you managed the maybe fear that they might have had in
Yeah.
taking that?
Yeah, absolutely. So the entire idea around Petal and what we were doing was around risk, and around the idea that, central to the idea that a younger person, or a person that doesn't have a credit history, is very hard to assess for a normal financial institution. And what I mean by that is, in the United States, at least, and this is true to greater and lesser extents globally, depending on which country you're in. In the United States, that there's been kind of generated this very elaborate kind of data infrastructure around consumer credit and business credit to a lesser extent, that helps financial institutions understand the risk that is presented by a given individual. And the FICO score is the primary means of doing that, which it piggybacks on the data that the credit bureaus, so Experian, Equifax, TransUnion being the largest, the big three. So there's this huge amount of data and information that's used to make predictions about somebody's likelihood to pay back a loan. And with Petal, what we're trying to do was to really do the same thing, but for a person for which that data and that information is not readily available. So you will have a good FICO score or a good credit history if you've used a lot of financial products. If you're younger, or you're from another country, or you're a divorcee, or you're a veteran, a lot of the time you won't have this rich kind of tapestry of financial actions from the past. And therefore, a FICO score is not going to really be able to be calculated for you, or it won't be a good one, at least. And therefore, a financial institution is not going to understand the risk presented by you. And when financial institutions don't understand something, they don't do it. They just don't. They deny you for credit. They'll see you as too risky. So, what we sought to do was that there was this population of anywhere from 30 to 100 million. It depends on how you see it. People in the United States that are new to credit, or thin file, being credit file, thin file or no file. And we sought to create a distinct means of understanding the credit risk presented by those people. And really, what we centered upon to do that was using Cashflow information, something we call Cashflow Underwriting, which we spun out a separate business today that's still run by my co-founder, called Prism, that exclusively provides this capability to other financial institutions today. But Cashflow Underwriting, what it does is it takes information that is available for that 30 to 100 million people, which comes in the form of a bank account, because the vast majority of people in the United States have bank accounts. There's some exceptions to that, the truly unbanked, but that's a pretty small population that also probably is relatively not creditworthy as well. But most people have bank accounts, even if they don't have a credit history. And for those people that have bank accounts, you have information. You have very relevant information for the risk presented by someone. And so what we did was to pull in that information, categorize it, and draw kind of insights and conclusions from it. So you can see somebody's income, you can see their expenses, you can see the volatility in these things. You can see if somebody spends more money than they make. You can see if there are unusual patterns in somebody's financial life. And our hypothesis, which ended up being true in building the business, was that we could use this information to make a prediction about someone's likelihood to default on a loan, just in the same way that FICO uses lots of historical credit bureau data to make a prediction about somebody's likelihood of defaulting on a loan. And that was really the central hypothesis of the business, was that we were going to be able to make a good prediction about the risk of a given customer based on their everyday financial behavior, making money, spending money, saving money, not saving money, things like that. And those are things that investors kind of understand. Um, and the world is generally aware that the U.S. financial system works pretty well, but it excludes a number of people, and there's a general awareness that maybe everybody who's excluded is not maybe some of the people being excluded are not going to be great to work with, but there's some like really meritorious, good, virtuous folks that are left out. And so that was something that was believable for the investor universe. On the equity investment side, which you need to raise a lot of equity to start a business like this, because there's a lot of fixed costs. And we also had to convince debt investors as well to actually supply the money that we were going to lend out. And that community is highly sophisticated when it comes to understanding consumer creditworthiness. They can quote kind of all kinds of nuance about FICO bands. Even though we weren't really relying on those things, we had them. But we were taking an alternative approach. They had a lot of nuance in how they saw the world. And so there's what I'd say is we were taking risk with the the platform, with the business, and with underwriting credit for these customers that for which you really didn't know as much in the traditional sense. But we had a really sound, rational basis for how they were going to behave, and that really ended up being true, and it remains true for how those customers are underwriting and or underwritten. And this is a trend that we're seeing today, really sweeping the financial industry, of using kind of things that aren't just FICO, using cash flow underwriting, cash flow information, information just from your checking and debit account, to be able to understand risk, because it's more inclusive. It includes more people than the typical just credit score, on its own does.
So out of interest then, in those investor conversations, because we've had conversations with people that say, I had to speak to 200 investors before I got anywhere.
Yep.
What was that journey like for you in getting people onboarded as investors?
Yeah, and I have a lot of perspective on this, because today I'm a full-time investor. That's how I spend my time today. And so I see this from the opposite end of the table as well. Yeah, raising money is really hard. There's a lot of people that kind of try to make it look easy. I think that's part of the the allure, the persona that they try to kind of cultivate, but it rarely is. And even when it is easy, that's usually the result of a lot of interesting preparation and kind of thought and strategy that goes into it. So it's never something that just happens. But I think when we initially were pulling together the capital for Petal, I think we pitched close to 100 investors for our seed kind of round of capital, which was about, I think it was $3.3 million. And so I don't remember what percentage of those invested, but it was definitely a small percentage, and there were a tremendous number of no's that we heard before we heard yes. And it kind of, when it comes to raising money, I particularly for a company, it's different when you're raising money for a fund, which I also am familiar with. When you're raising money for a company, typically you have one main investor. That's not always the case, but it's usually the case. And as a result, and once you get that one main investor, everything else is pretty easy, or at least significantly easier, because you can point to the fact that somebody else is convinced. But it only takes one. So, even the best companies, the companies that have gone on to become public companies and unicorns, and that created billionaires, they even those companies that we can now look back and say are amazing, almost all the time they go through the exact same thing. They ask, out of every 10 people, only one will want to invest in it, and it's very hard when you're raising capital as an entrepreneur to you got to deal with a lot of rejection, along the way, because your odds of converting any given investor are actually quite low. And so that's the thing that really sticks out. And I think our idea with Petal was sufficiently a little off the beaten path, particularly in 2016 when we were raising money. This is a little bit before the age of all the neobanks and all this stuff that, with Chime, which just filed their S1. Before that was really as successful or well known. There weren't a lot of people out there trying to create, quasi financial institutions that were fintech companies. We had to probably work a little harder than somebody who was starting a SaaS company, where it was very legible and understandable to an investor, where they knew this category. If you get the right people and the right technology and the right strategy, it's going to work. For building a full stack credit card program where you're virtually a bank except in name, that was a little more of a stretch. And so because of that, and because of the capital intensity that everybody could just see, because we were going to be lending the money, that scared people off. And so it took more effort to raise that capital. But if you not always, but you can usually find people that kind of have conviction just similar to you, in a company, if it's a good idea, and if you've got the right kind of background to be a leader. You'll eventually find those people, even though you may need to sift through a lot and kind of kiss a lot of frogs and so on, whatever expression you want to use, along the way. But raising money is hard. So that's the I have an expression that the hardest fundraise is always the next one, or the current one, the one that you're on. They always look easy in retrospect. But in the midst of doing one, it's always like very daunting and very challenging.
Were there any moments where you thought Petal might not make it? And what did you learn about yourself during those moments?
Yeah, I mean, of course, I think every business has moments where it falters. Where things just kind of aren't coming together. The experience of being an entrepreneur is that, 4 days of the week, or make up whatever number it is.
It's 8 days out of the week.
Yeah, 8 days. Well, I was going to say 4 days out of the week, or maybe 8 days out of the week, you wake up and your phone is full of bad news, and you're just running around fighting fires. That certainly was the case. For periods of the time that before we sold the company. But it's something that I think anybody who spends at least a couple years building a business, you will have periods of time where it feels like it's not going to work. You just get hit by too many problems all at once. There's also correspondingly, it tends to be the case that you feel like the world's against you, and then it reverses entirely, and you feel like you're dancing in sunshine, and it's all very, you feel destined to succeed. It's a strange psychological journey, but I think something I learned along the way, in kind of grappling with existential, kind of success or failure, was when you're leading a company, it's really critical to, you have to kind of grapple with those problems differently than everybody else. Like the other people in your team, it's a job. When you're the founder of a company, it's something a little more than that. You're the entrepreneur. You're the founder. It's kind of you don't just get the fun of running the company. You also get the responsibility of kind of guiding the ship, and kind of tending to people's morale and all of those things. And so when bad things happen, I find you have to kind of step up or step back, or I don't really know the expression, but kind of level up the way you're thinking about it. And even though you just like everybody else may see failure just one step ahead of where you are, it's important to kind of talk about why you're doing what you're doing, tell people the truth about kind of what's happening, but help people rise to the occasion to fight and to win in the face of odds that are hard. And and to inspire people. When you can't really inspire people when you're just dwelling on being freaked out. You have to step back and and kind of look at the bigger picture, remind yourself and remind everyone why you're doing what you're doing, and emphasize that you're going to succeed. Because if you don't believe that, no one else will.
Mhm.
And if no one else believes that, that actually will, that can cause you to fail,
Mhm.
because people start behaving very differently when they don't think that they're going to succeed. So I think that's the biggest thing that I learned, is that you have an obligation to rise up, kind of out of any anxiety or kind of just the terror of potential failure or whatever it is, to do the things you need to do as a leader, to inspire and manage and lead your team so that they can do their jobs, because they can't grapple with the stuff
Mhm.
that you're supposed to be doing. Your role is to allow them to focus on doing what needs to be done to win.
It reminds me of second wind, like when you're running or doing any sort of endurance activity. It like sucks. It's almost like breaking the sound barrier. It like sucks, and you're like, oh, how much longer? And all of a sudden, it just gets like normal or easy. And it's like, well, that was weird.
Right,
And
right,
and then you just have like 50 to do things on your list, and you're just like, okay, so now the next one or whatever. How do I want to prioritize this? And it's kind of cool to like level up with the video game, but it does, it takes support. That's kind of what led me into coaching. I was curious, what resources did you tap into during those tough times?
yeah. I mean, I think the so over the years I have had a coach, that I worked with, and I found to be really helpful. You kind of It's hard to see yourself as others see you. It's people can see things about
Hmm.
you that you'd think that you would know, but you don't. Uh, you know, I think something that coaches will do sometimes is tell you that you kind of have permission to do things you need to do. It's like kind of to unlock things the behaviors you need to do to win, to lead people. And so that's something that I experienced and was really helpful. I also think it's very important that when founders, or really any leader, is doing something hard, which creating a business is hard, but particularly when you're in a rough stretch of a business, it's pretty important to have other people who have kind of are in a similar spot, or kind of have relevant experiences to speak with. And so, if you're the CEO of a company, it's important that you have other peers that you have relationships with who have the same job, have the
Hmm.
same responsibility, and probably are facing similar obstacles. Not specifically, but in a general sense, they're dealing with the existential kind of challenges. And it's important that you talk to those people, because you can kind of be in your head when you're dealing with something, and talking to somebody can really unlock
Hmm.
you know an obvious path that you need to take, or it can help you keep things in perspective about something may not be as big a deal as you think it is. Others may not perceive it to be as big a problem
Yeah.
as you do, and so I think that's important. And then also, I think, generally, however you describe them, like mentors are important too.
Hmm.
I find that mentors you can't level with as much, because they're up. Generally, they're not sideways.
Right.
They're not your peers
Hmm.
most of the time. But kind of mentors, oftentimes your investors, it's important to talk to about these things, which is a challenge a lot of times, because your investors will be like your board members and things like that, where you have to control somewhat kind of how raw the current of information is, because you don't want to freak them out. It's something that as an investor, today I spend a lot of time. We're typically not on boards with Gilgamesh, but we invest in a good number of companies that, we're what something we see is really important, is that we we are kind of right there with the entrepreneurs as an ally of theirs, as somebody in the trenches with them, that they can tell us, what's going on, and we will try to help. They already have the money, we're not they're not going to give it back to us, so they might as well tell us the truth and let us help them succeed, because the alignment is virtually complete, not perfectly complete, but there's often kind of misalignment between investors and entrepreneurs. But I think typically when people are facing challenges, you're in the same position, because if they fix the problems and succeed, the company and the investors and everybody else succeeds. If they don't fix important problems and the company fails, well, everybody fails. So I think kind of investors, mentors, other people that can, maybe can see over the horizon a little bit more than you, can be really, really helpful in that respect as well.
One thing that fascinated me, well, still fascinates me, is the power that mindset has, and that we don't really have the limits that we think we have. Like, we're not bound by the limits that we think we are.
Right. It's all in your head.
It
Yeah.
really is. I mean, I know that's an old adage, and there's probably a reason for that. I'm curious, speaking to mindset, what were some of the biggest shifts going from law into founding a company or into being an investor?
Yeah. Yeah. The biggest, so when you're a lawyer, you have a very compartmentalized set of roles, responsibilities, obligations, tasks. And lawyers are kept in a box. There's several reasons for that. One of which, you bill by the hour. And so, like, your client tries to keep you really focused on the things they want you to work on, and not let you work on other things, because their bill is going to be a lot higher. And that's for virtually any client, attorney relationship. I think that's true, because lawyers are not cheap. So and that's kind of one cause, but there's other things. Your expertise, the reason people come to a lawyer, are generally pretty specific. And so, something I really began my career in earnest. I had other jobs, but that was really when my career kicked off. I began as a lawyer, and something that, after I was a lawyer, I was an investment banker. So I stepped. That was my first step away from being a lawyer. I found it to be an interesting thing that wasn't immediately obvious, that when you change roles, you have to really kind of quickly adapt to, okay, what are the new types of things that I'm now responsible for. There's something that, when you're a lawyer, we would call them, that's a business point. Which would mean a huge variety of things, but we would recognize that it's a business point, and therefore we would just not even touch trying to figure it out or giving an opinion or anything. Well, when I became an investment banker, I was responsible for the business points, and so that was a pretty significant thing, and it's not something that I immediately kind of seized upon, because you develop these ways of kind of seeing the landscape of your world. And they don't just shift immediately. And you need to change your mindset, which is actually pretty hard. It's difficult to change your mindset. I find for myself, I've changed roles several times in my career. It takes 6 months to really completely reset, and probably not even completely reset, to mainly reset your mindset takes 6 months. To completely reset potentially takes years, for you to really see the world as you're supposed to see it from a given role. So the kind of way that roles compartmentalize you is something I've learned that it becomes subconscious, and it takes time to shift it. The other thing I'd say, generally over my career, from lawyer to investment banker, and then particularly entrepreneur, and this is kind of true as an investor, but not as true as an entrepreneur. Particularly when you step into the entrepreneur role, it becomes the reality of that job is total responsibility. In that, I talked about a lawyer doesn't worry about the business points. Well, an entrepreneur has to worry about all the points. There's nothing about anything pertaining to your business that you're not responsible for. You have total ownership. And that's kind of a scary thing, that you're responsible for everything. Some people misinterpret it and mean that to mean that you have to do everything, which is actually wrong. You're just responsible for it. It doesn't mean you have to kind of perform every action. That's what you need to hire people for, and you need to delegate them to do. And then you're responsible for whether they do it or not correctly as an entrepreneur. But that was a huge shift. And I like to think that generally taking more ownership for things in your life is a good thing. It's kind of the same thing as having agency, that you see yourself as being able to influence and change the important things that affect you. I find that very successful people tend to have extremely high levels of agency and ownership, and that they, if something matters, they seek to change it. But when you're an entrepreneur, that is kind of one of the ultimate forms of that. Maybe the other one being kind of like a parent, or like maybe a leader of a country or some political unit is like that, perhaps too. But that's the biggest mindset shift that I've really observed. And probably as an investor, honestly, you probably step back from that a little bit, because you aren't kind of responsible for the companies you invest in. That's the entrepreneurs that are responsible for it, and your job is more like I've kind of used the analogy of like you're more, almost more like a grandfatherly figure, where you're the entrepreneur is kind of the parent of the company, the investor is kind of the grandparent, and your value comes in kind of showing up periodically and telling wise tales to help them think about problems they're solving, but you're never going to actually solve the problems yourself, because the entrepreneur has to solve them. If the investor is there doing the things, it's not sustainable, and like the company will probably fail. So that's another interesting mindset shift that I've found is that kind of out of necessity to kind of to take on. But there's a lot of them.
So, staying on the theme of mindset, I want to kind of go back to what we were talking about, being resilient as an entrepreneur, needing to push through rejection all the time, probably especially when it comes to investment rounds, but also with initial clients and things like that. What would you say is the balance? And there probably isn't a straight answer to this, but the balance between keeping on going, pushing through. I've been told no 150 times, but I'll go for 151 and I'll go for 152. Versus, and this is maybe a horrible phrase, but you know the phrase to flog a dead horse? You're aware of that?
Yeah. Well, I think in American English, to beat a dead horse.
Right. Okay. So yeah, beat a dead horse, flog a dead horse. How do you know when to pivot as an entrepreneur? When should we pivot versus when should we go, no, I'm keeping on going with this?
So I think this is an absolutely essential skill, being able to know when something you should just double, triple, quadruple down, fight, versus like do something else. I'll throw back another saying. I think it's a Texas saying. It's like George Strait, the country singer. It's like, you got to know when to hold them, and know when to fold them. Like the poker reference. And like there's some hands, some strategies, some like pursuits that are worth it, and you learn it over time that it's worth it. But sometimes you learn that it's not. And there's multiple levels to it. There's you as an entrepreneur. So kind of just putting on the entrepreneur hat. It doesn't make sense to just for your kind of approach to just run through brick walls all day, because you just run out of steam. You run out of time, you run out of money, you run out of attention, you run out of energy. You have to choose your battles. And so really savvy entrepreneurs, they're actually very good at kind of avoiding the battle that will consume too many resources, or they choose the things they can win, and they change their strategy so that they will be successful. So I think it's a misinterpretation of kind of what you need to do to just see like the absolute form of stubbornness being the right approach, because it's not. Again, there's this kind of hustle theater and, the images that people cultivate that where they probably try to make it seem like that, but I think it's actually the wrong approach. There's also the take off the entrepreneur hat, I think the hat you wear kind of just as an individual, as a person, is that you should probably, just let's say you're not being successful as an entrepreneur, and like you're running into massive amounts of kind of failure, and it's just not getting off the ground. You yourself should think about, is that the right thing to do? That there may be better uses of your time. Your opportunity costs basically at all points in life are pretty high. You kind of doing something where you will have more success could be the right thing to do. And as an investor, you see this all the time. There's sometimes that companies just kind of go sideways forever. They're never really, they never get the traction that they need, yet they don't run out of money also.
Mm-hmm.
And it just ends up being just like a mediocre result 20 years later. And that's not good either. And that person may be incredibly stubborn and incredibly resilient, but they were stubborn and resilient maybe about the wrong thing.
Mm-hmm.
And so I think that kind of being able to choose where you really, kind of the thing the hill you'll die on, if you will, is super important, not just for being successful, but also for, kind of, I think for having an enjoyable career, you have to do it. And there's a mathematical thing that I like to talk about sometimes, which is a local maxima versus a global maxima. So it's kind of like if you see this like plot of land, and it's a mountain range, and your objective is to, get to the highest point. Just because you're walking uphill towards what you see as a peak doesn't mean that it's the highest peak. And your objective is to find kind of the highest peak that you can. And sometimes you need to abandon, one of those hills that you're walking up because you see a higher one in the distance that you can go pursue. That happens a lot, I think throughout one's career, but also when you're an entrepreneur, you'll find opportunities while pursuing a different one. And that's the times where you pivot, where you're trying to do something generally, and then you try something specific within that general approach, and you learn that a different specific approach makes sense. The thing where it doesn't often make sense is when you're doing something general, and then you kind of just choose something else general that kind of is totally different and you don't have information on. That's often where pivots fail.
So just kind of summarize there. So I think what you're saying is keep the what, be resilient about the what, but you can pivot on the how.
Yeah, exactly. Like I think there's an expression that I've heard a variety of times called "love the problem" or "marry the problem, date the solution." I think,
right?
Where you problems you find in life are probably real. Like if I don't run into a lot of things that, I guess there's like little everyday stuff that, there's a bump in the road or something, but like most things that you really identify as a problem that you want to start a company around, or you want to dedicate your career to, they're real, like you're not, it's not an illusion, but and so those things are the kind of things that you want to really lean into fixing. But the specific ways you can fix those problems are manifold. Like there's going to be a lot of different ways for any problem to be solved. And maybe, you start with the direct to consumer way to fix something, and it actually needs to be like more of a business solution. Or you start with you want to create a consulting firm, but you actually need to create, I don't know, a marketing firm to fix stuff. There's seemingly endless ways that you can productize around a problem, in the economy. We see this all the time with kind of in Fintech, which is where I spend all my time. That the problem of getting access to credit. You can create a data company. You can lend the money yourself. You can counsel people on how to build the credit history. You can help, kind of make sure that the marketing efforts from somebody else is reaching a person who needs to get access to credit. All those things are businesses. and which specific route you take. One may be more successful than the others, but you can, in learning about that problem, you learn kind of which approach is going to be best. And you should feel free to, kind of test and discard things that aren't worth the time and effort.
Makes sense.
How did you settle on the name Gilgamesh?
Yeah, I often say that it's a proxy for whether you're talking to a huge nerd or not. When people ask about the name, but I read a lot, and that extends a little bit to kind of ancient mythology, I guess. Gilgamesh was a Mesopotamian king. He was a real person. They've actually figured this out. He's more popular though because he's kind of the subject and main character of the Epic of Gilgamesh, which is kind of like the Odyssey in Greek mythology, but this is Mesopotamian, and it's a story of a man who's 2/3 God, 1/3 man, who goes and does all these things that nobody's ever done and fights these enemies that nobody's fought, all in the pursuit of immortality. And my partner Miguel and I, with Gilgamesh, we thought that's actually kind of a cool metaphor for entrepreneurship, that you're doing these incredibly challenging things that generally people think are maybe not impossible, but very difficult and risky and all these things. And that's the job of an entrepreneur. And if you look at the actual king Gilgamesh, the person, he was one of the people who was one of the initial builders of civilization in Mesopotamia. He built kind of the first irrigation systems and helped establish, and construct these cities. And so, I think that it's a good metaphor for entrepreneurship in a general sense, that you're maybe you're not chasing immortality, but you're trying to build something bigger than yourself that will outlast and be of greater significance than you. And that's why we picked it.
So Gilgamesh Ventures is a seed stage venture capital fund focused on global fintech.
Yes.
What are the most overlooked risks in early stage fintech today?
So the when you say the overlooked risks, you mean the biggest risks in starting a company, or the biggest, or do you mean like opportunities? Like I'm curious.
I think both of those would be
Okay.
interesting if you have an answer on either or both.
Yeah, I'll start with kind of the risks, and then I'll talk about the opportunities. So I mean, fintech is different than other parts of the economy, in my opinion. It's obviously, it has to do with finance. It's in the name. And but that has a couple implications. In fintech, you often have to deal with regulatory consequences. So every country in the world that I'm familiar with has a lot of rules for how finance works, and it touches basically every major part of fintech, from payments to lending to deposits to insurance to investing to borrowing money to all these things. And one of the things that a lot of companies just miss when they go to start a company is they take a model or even kind of a philosophy of building a company from outside of fintech, and they try and apply it in fintech without thinking about how it needs to change. And they don't take into account the fact that you've got to really take these rules seriously when you're building. And so it's a frequent problem that a company will have a lot of initial success, but then you'll eventually have significant issues because you ignored or didn't really, faithfully comply with rules that are serious and important. So that's one thing. Another thing is, often in fintech, partnerships are very, very important. So for all sorts of reasons, you end up having to partner with banks, insurance companies, big payments businesses, often just to sell your product, to distribute it becomes important. But these institutions, really unlike other parts of the economy, are extremely risk averse and extremely conservative. And so the approach, kind of the enterprise sales motion to partner with these institutions is different, and you have to really be careful and thoughtful about how you kind of appear de-risked for those partners that are really important for you to succeed yourself You need to be able to get these people on board. So those are two risks in fintech. I would also add just capital intensity. You have to raise typically more money in fintech than outside fintech to kind of get to scale and to a minimal viable product also. But in terms of opportunities, I mean, we at Gilgamesh and myself, I think it's a pretty interesting time to be investing in fintech. I think we saw this wave of innovation over the last decade and a half, really basically just starting after the financial crisis, that has swept the world. You've really seen huge changes globally from, in the US, companies like Affirm and Chime and SoFi and others and Bill.com, to other countries, Brazil, Europe. The examples are everywhere. But that kind of wave after the financial crisis kind of crested, and in my opinion has ended, and we're part of a new wave now that's largely driven by technologies that didn't exist during that time. So you've got, for obvious, to the audience, probably gonna be obvious, you have artificial intelligence, just creating dramatic, areas of opportunity to build new types of companies. That's not just in fintech, that's everywhere, but it's also very true in fintech, where the power of automation is super, super powerful. And so that's something that we see that kind of crosses all boundaries in fintech. The ability to use generative AI to build new businesses and better businesses and more profitable businesses, and to do it all faster. So that's something that's a huge deal. And then you've got other technologies that are important as well. The stable coins, kind of a subset of crypto, is something that we're seeing really rapidly reshape the global economy, particularly anything touching international finance, international cross-border economics. The ability to move money relatively seamlessly and cheaply, and to make that happen is really important. It's a seismic change in how the economy functions. And also we're seeing intersections between that and artificial intelligence as well. So, allowing agents to do the same thing. So agentic payments. But there's really opportunities are I think accelerating in fintech, which is exciting. It also makes our job hard because there's so many good ideas to get involved with that, it's tough to narrow down to which ones we want to be part of. But
So out
it's
of
really
interest, on that point, with so many good ideas and so many people, I'm sure, that come to you seeking investment, it's probably hard to narrow down. But if you could summarize in one key theme or one key element that sticks out to you, I'm thinking for our audience members that may be seeking to raise capital themselves, how do they stand out?
Yeah, I kind of think in some ways trying to stand out may be the wrong approach. And I'll answer your question, but it's really kind of like what do you need to do to kind of to really put yourself in the category that somebody's going to want to invest. A lot of it comes down to you as an entrepreneur, because that's a lot of what the bet is on. You're betting on, particularly the seed stage. You're investing in people that are executing ideas, but you're investing in the people. That's the most important part. And so the kind of the individual is very central to the decision. And so, of course, you should be an awesome person. That's like that's kind of hard to do, just to become amazing overnight. But really, what you need to do is you need to give investors confidence that you have a very clear and like aggressive and ambitious and thoughtful vision of what you're doing. You need to kind of come off as the type of person that can build a generationally important company, that can inspire people to work with you, that will be able to sell what you're doing to partners and to customers and to others. And you will be able to build a culture of great success. A culture of people working hard and doing amazing things. Those are all kind of the same thing, in my opinion. And so it comes down to you need to have an intensity of purpose an intensity of kind of just vision that, is not, it needs to be very strong. And so what my kind of suggestion to entrepreneurs is that you need to go really deep into your idea and really build conviction. That conviction needs to be very visible to the entrepreneur, to the investors, because they want to see that you have like a messianic, level of kind of vision and kind of passion for what you're doing. Not the kind of passion where you enjoy something and you like it, but more the passion that you will not be denied success, and you will do everything that is required for you to make it work. Because if you will do all those things, you often will succeed, and you will be the type of company that they'll want to invest in. And then there's other things that are I think simpler, like picking a market that's big enough, and really choosing a smart approach towards reaching your customers and building the right product. But those are downstream, in my opinion, from that zealous intensity about what you're doing. If you're really, kind of 1000% fixated on success in what you're doing, you're going to pick those things correctly. You're going to do those things automatically because you want to win. You're going to find the right approaches. You don't want to. The investors always want to invest in somebody who they have a hard time seeing them fail. You want it to be just overwhelmingly obvious that this person will succeed no matter what. That's the most important thing, I think, for what you should do if you're raising money, is just to really triple, quadruple down on kind of your conviction and your intensity of what you're trying to do, and that will really help you with investors.
Thanks. Thank you.
Well, Andrew, you gave us a lot of wisdom. Really interesting story. Thanks once again for coming on. Is
Of
there
course.
anything that we didn't touch on in fintech or entrepreneurship or investment that you think we should close with?
No, I don't have anything specific. I really enjoyed talking to you guys, and when it comes to myself, I love entrepreneurship. I love fintech, and I really savor the chances that I always have to meet people building things. So I just tell your audience, if you're doing interesting things in financial technology or adjacent to it, to find a way to reach me. And I love to talk to people, and we wish we could invest in all of them, but like we love backing great entrepreneurs that are going to do big things. And so that's probably the biggest one. We announced the closing of our second fund today, and so we got a lot of
Congratulations.
capital to invest, and so would love to meet everybody who's doing amazing things in fintech.
And where can people get in touch with you or follow what you're doing?
Yeah, I tend to be most active on LinkedIn. So just my name on LinkedIn. I'm not particularly active on Twitter, but maybe email is the best way to reach me. Just my first name at gilgameshvc.com. Relatively easy to type and to find. So, absolutely open for anybody that wants to reach out.
Great. Well, thanks once again. It's a nice chat.
Thank you, Andrew.
Great to do this with you guys, and thank you for having me. And it's been really, really wonderful.